What's up guys, फिर से मैं आपके लिए हाजिर हूँ. In today's video I'm going to be talking about the fundamental differences between investment banking and sales and trading. I'm going to be talking about the differences between the nature of the two businesses, the type of work that's involved, the skill set needed for both, the lifestyle, the compensation यानी कि पैसा, as well as the exit opportunities. Now, why am I qualified to speak about this? I'm qualified to speak about this because I worked across both the sales and trading and investment banking division at Goldman Sachs' New York headquarters between 2016 and 2018, unlike some crooks who worked in Goldman Sachs' asset management division, which mind you is a totally different division altogether, and are giving us gyan on investment banking. Panchod. Before we kick things off, two very small announcements. The first one being कि देखिए अभी मेरी ebook की flash sale चल रही है. The next 15 copies of my ebook will go for $5 only. So if you want to be amongst the first 15, then definitely grab your copy as quickly as possible using this link, and you'll find the same link in the description below as well. Second announcement, देखिए दोस्तों मेरा channel recently काफी grow किया है. It was only 2 weeks back that I was close to about 100 subscribers, but now I'm nearing the 500 subscriber mark. So thank you so much for the love and support. But देखिए दोस्तों, I'm still a bit disappointed to see that nearly 87% of you who've been watching my videos haven't subscribed to my channel as yet. So please guys, what are you waiting for? If you're finding value in the content that I'm putting out on a consistent basis, then please एक ही request आप लोग से मेरे channel को please subscribe कर लीजिए. The most basic or fundamental difference between sales and trading and investment banking is the fact that sales and trading is the public side of the business, whereas investment banking is the private side of the business. Now, what do I mean when I say public side and private side? What I mean is that sales and trading is concerned with the public markets or the financial markets, which can be broken down into the equity markets, also known as the stock markets, and the fixed income markets, also known as the bond markets. Investment banking, on the other hand, is concerned with long-term, complex strategic transactions or deals before they are disclosed to the public. Sales and trading transactions, also known as trades, are of a much smaller size, and listen to this carefully. For the most part, the trading arm of an investment bank acts as an intermediary or a middleman between two parties or clients. I'll give you an example to make this crystal clear. You've got client A that's looking to buy a particular security. It could be a stock or a bond or FX or a derivative or a commodity. Now the bank might know another client, let's just call that client B, that's looking to sell that particular security that client A is looking to buy. So now what the bank will do is the bank will line up client B as the seller of that security, end up purchasing that security from client B, which is the seller client, and then subsequently sell that security to client A, which is the buyer client. And the difference between the price at which the bank bought that security from the seller client or from client B and the price at which it sold that security subsequently to client A or the buyer client is what the bank ends up pocketing. Now talking about investment banking. Investment banking transactions, also known as deals, are large corporate level transactions such as buying or selling an entire company, restructuring a company, or helping a company raise money that it might need through the issuance of either debt or equity. Banks here act as advisors, and so the way it works is you have, say, a company X that's looking to sell itself and then a company Y that's looking to purchase company X. You have one investment bank, say a Goldman Sachs, that's acting as an advisor to company X, and a different investment bank, say a JP Morgan, that's acting as an advisor to company Y. So the two companies, along with the respective investment banks, are having ongoing discussions to see whether a deal is possible, and if so, what the terms of the deal or what the economics of the deal should look like. Now, of course, these discussions that are taking place between the two parties are happening behind the scenes, but if an agreement is reached, then a public announcement is made, and the two advisory banks end up receiving a percentage of the size of the deal as commission. I mentioned that the trades or the transactions in sales and trading are much smaller in size compared to the size of the transactions in investment banking, but please note that they're occurring way more frequently. A bank is quite literally carrying out multiple such trades on a daily basis during market hours. Since investment banking transactions are much larger and more complex, it takes much longer for a transaction to take place. In fact, even after months of work trying to effect a transaction, sometimes the transaction doesn't even materialize. I'm not going to spend too much time talking about the skills that you need for investment banking because I've explained the technical skills as well as the soft skills that you need for investment banking in quite some detail in these two videos, so make sure to check them out. But let's focus on the skills that you need as a trader. As a trader, you've got to be very analytical, you've got to be very strong mathematically, you have to be very quick on your feet and have very good judgment and very good decision making ability while working under a tremendous amount of pressure. But remember, it's called sales and trading because in addition to the trading component, there's a sales component as well, which involves cultivating relationships with new as well as existing clients. clients. So similar to investment banking, the sales component within sales and trading is a relationship business. This video in which I talked about the soft skills that you need for investment banking is applicable for sales roles within sales and trading as well. In both banking as well as sales and trading, you've got to be very emotionally strong, but it's a different kind of strong that's needed for both. In trading, you cannot make decisions emotionally. In other words, you can't let emotions cloud your judgment, which then impairs your decision-making ability. So it's always facts over feelings, logic over emotions. Being emotionally strong in banking means being really gritty, being very resilient, being willing to grind it out and just hang in there even when the going gets really tough. All of you probably already know about how brutal investment banking work hours can be, but I think some of you might be under the wrong impression that sales and trading is like a 9-to-5 job. Not true at all. As a junior trader or a junior salesperson, you're typically coming in very early in the morning, sometimes as early as 6:30 or 7 o'clock in the morning, just so that you can actually catch up with everything that happened in the global financial markets overnight before trading in the region in which you're working opens in the morning. After 4 p.m., which is after the markets close, you spend a fair bit of time booking trades and making sure that everything is in order before trading resumes again the following morning. So you come in around 6:30 or 7 o'clock in the morning and stay until around 6 p.m. in the evening. Now, as a banker, you're coming in much later. You're coming in around 10 o'clock or 10:30 in the morning, but you're staying until 11 p.m., midnight, and very often even past midnight. Within banking, the harsh reality is that you generally have to come into the office on a Sunday, but there's hardly ever any weekend work within sales and trading. But what I will say is that even outside of market hours or say during the weekends, you can't be completely switched off as a trader or a salesperson because you have to keep up to date with the macro as well as micro events that are taking place all over the world that may have implications on the financial markets once trading does resume. In a nutshell, both sales and trading as well as investment banking are high pressure jobs, but in very different ways. In trading, the pressure is typically concentrated during market hours versus investment banking, where the pressure is more diluted, which doesn't mean that it's less. It just means that it's spread across a much longer period of time given the long-term nature of banking deals. Whether you're starting out as an analyst within investment banking or as an analyst within sales and trading, the base compensation or the base salary is generally the same or is very similar. At least that's what the case was during my time at Goldman Sachs between 2016 and 2018. But the year-end bonus is generally much higher for investment banking analysts compared to analysts within sales and trading. But keep in mind that the time investment within investment banking is also much higher compared to what the time investment is within sales and trading. Having said that, if you can prove yourself to be a star trader, a money maker, the type of trader that Michael Lewis calls a big swinging dick in his book Liar's Poker, then you can end up taking away a fuck ton of money. You can end up earning about 60 to 70% of your annual salary as your year-end bonus. And so at the end of the year, you can end up taking away about 1.5 to 2 times your annual salary if you combine your salary as well as your bonus. But generally speaking, during the first couple of years at the investment bank, whether you're working in sales and trading or investment banking, it's really hard to stand out or be head and shoulders above the rest of your analyst class. And that's because the first 2 years is your developmental phase, which entails a lot of time spent learning the ropes as opposed to bringing in business or money for the bank, which only really starts happening once you become an associate. Both banking as well as sales and trading provide a plethora of very lucrative exit opportunities. A lot of bankers end up leaving investment banks for private equity shops as well as hedge funds that invest their own capital. Now, by virtue of having worked with so many different types of corporate clients, bankers become very good at understanding the business models of companies and what separates good business models from poor business models. And so when they're working at these hedge funds or private equity shops, they become very good at analyzing what would make a good investment and what would not. A lot of bankers end up starting their own companies as well because of the entrepreneurial skills that they learned during the banking days as a result of having worked with so many different types of corporate clients. A lot of traders leave investment banks and go to hedge funds as well, but they have very different kinds of roles at those hedge funds. Now, they generally manage the portfolios of those hedge funds on a day-to-day basis, which means that they trade securities in and out of that portfolio as well as hedge the portfolio overall depending upon movements in the financial markets. So thank you so much for having watched this video, guys. As you can tell, both sales and trading and investment banking are still very lucrative career options, and I'm hoping that this video actually gave you a firmer understanding of the two professions and perhaps even dispelled certain misconceptions that you may have had previously. As always, please continue supporting this channel through your likes, your comments, your shares and subscribes, and I promise that I'll do my best to continue supporting your dream of breaking into the best investment banks all across the world. I look forward to seeing you guys very soon in my next video. Until next time, keep smashing it, stay safe, take care, and cheers.